The consequences of tardiness, that is, late payments in accounts payable, are not always what you think. Yes, in some cases, there is a slight financial benefit, but this is far outweighed by the negative issues that many don't consider when they plan to pay their suppliers late. Make sure you stick around until the end when we discuss that one issue that very few folks take into consideration when planning to pay late. That one issue that can cost them big time. Hey guys, I'm Mary Schaefer, founder of AP Now, your one stop shop for cutting edge business intelligence you need if you work and manage or have responsibility for either the accounts payable or payment function. So let's get started with the one positive. Yes, if you hold on to your money for a few extra days, your cash flow will be slightly improved and there will be a very minor financial benefit. The interest income you earn for those few days that you hold on to the money, or the interest expense that you didn't have to pay if you're a net borrower. But, and this is a big but, this is a zero sum game. So your gain is your supplier's loss. What's more, it may cost them more than you earned due to differences in your credit standings, which leads to the number one reason purposely paying late is not a good reason. Not only does it cause your vendors a cost, there is the aggravation factor. You'll annoy your suppliers and you stand a good chance of harming your vendor relations. Suppliers want one thing from their customers' accounts payable group, and that is to be paid on time. That's all they want. They want their money and they want it as soon as possible. And you paying late because you're maneuvering around with your financial statements is not apt to make you any friends. So you've got the aggravation factor. The next factor is what I call the late fee issue. Now, some of your suppliers will charge a late fee if you pay them late. Now, you may be sitting there, you're listening to me, and you're saying, yeah, well, they can charge a late fee, but we don't pay it. And you may think that you don't pay it, and you may not actually be paying out of your pocket, but your vendors will accrue those late payments. And then when you have a vendor credit, when you have a credit memo that's your due money for whatever reason, many of them will take that credit and use it to wash away those late fees that you think you're not paying. There's also the potential reputational damage. What am I talking about? You paying late can damage the company because what will happen is you'll increase your DPO figure, your days payable outstanding, which is a calculation that is done off your financial analysis. Now, if this analysis is being done by your banks when they're deciding whether or not to lend you money, lend your organization money, and at what rate to lend you money, or it's being calculated by your suppliers who are trying to determine how much credit they should extend your organization, a high DPO figure is not going to work in your favor. So you can have this potential reputational harm, which you never even know about because they're not going to come out and tell you, hey, we're charging you a little extra on your line of credit because you have a high DPO. They're never going to come out and say that. Okay. So there's also this, behind the scenes look. And there's the issue of additional work. Okay. When you don't pay on time, your suppliers will send a second copy of an invoice to your accounts payable department, and they are well within their rights to do so. And it will take your team extra time and effort to weed out those duplicates. This is wasted efforts that do not create any extra value for your organization. Okay. So additional work. Before we get to the last issue, one that, by the way, could be costing you quite a bit, we'd like to take a moment to remind you that we tackle big accounts payable and payment issues on Tuesdays and Thursdays, and on Saturdays, well, we just have a little wordle fun. So please check out this channel for a full range of videos that will help you expand your accounts payable and payment knowledge. Okay, and now the issue is the issue of possible duplicate payments. As I've already mentioned, some of your suppliers will send a second copy of the invoice, and a few of those items may slip through, and your vendors may accidentally get paid a second time. And I'm here to tell you that most vendors do not automatically return that payment. Many of them will issue a credit memo, which creates a whole lot of other problems, which we did a video on that, and I'll put a link in the show notes below if you want to see it. So your paying late will get you a second invoice, which will not only cause extra work for your staff, but you may accidentally make a duplicate payment, which may or may not be returned. Duplicate payments, as you know, are a real financial drain on any organization's bottom line. And of course, the mission of your accounts payable team is to make as few of these as possible, ideally none, but nobody's perfect. And that's why AP Now put together a special portfolio of short videos to help our viewers with this issue. You can watch one or all of the videos right now using a link that will appear momentarily on your YouTube screen and is in the show notes below. As always, we appreciate your thumbs up, your shares, your comments, and your subscribes. Good luck.